Many of these companies were grandfathered into the system, were given licenses without the requisite due diligence done on them. Many of these were operating without regulation for a while before they were brought into the system. Now, upon being licensed, they came with the practices that they were engaged in before. No rules, no man's land. They had become used to that. So even though they had been licensed, they continued to operate largely without complying with the rules and the regulations that applied to their businesses. They had very poor management in place, very poor internal control systems, very poor record keeping, and the like. And it appeared that the interest of depositors was not on their minds. Meanwhile, they operated with depositors' funds. A number of savings and loans companies and finance houses also strayed away from their mandates under the licenses that the Bank of Ghana had issued to them and tried to operate as commercial banks without the requisite amounts of capital or the expertise to manage the complex risks that they were taking. Instead of taking small deposits and lending small amounts of money per customer, these institutions took on large deposits per customer and made large loans. And what is more, they tended to place resources or funds with each other. So savings and loans were giving money to other savings and loans. Finance houses were giving monies to other finance houses, and vice versa, instead of actually making loans to small borrowers. A lot of these monies were also given out as related party loans. So they gave facilities to their affiliates, which were sister companies operating within the same groups. Needless to say, much of these funds became unrecoverable. Essentially, it is these factors, namely poor capitalization, poor business models, poor governance, and poor risk management, and in some cases, fraud and dishonesty, that led many of these institutions to collapse.